Welcome to Redefining Real Estate. I'm Rylan.
And I'm Morgan. Expect a mix of education, humor, and authentic conversation as we explore all things real estate.
Let's jump into today's episode.
Okay, so last week on my Instagram story, you guys were asking me, how much do I actually need for a down payment? So that is what we're going to cover in today's episode. In my experience, I've had a wide variety of types of clients, but my guess is that most of you guys are first-time home buyers that are going to be listening to this podcast, and so that's the reason you want to know how much you need. So we'll start with asking you first, Rylan.
Yes.
In your experience, how much have your clients, typically had on hand, and how much are they needing to actually start looking into the home buying process?
Yeah, for sure. So the first thing that comes to mind is some clients of mine that are currently under contract for a new construction home. Mm-hmm. They were under the impression that they needed like 20% for a down payment of 20% of the sales price.
Yeah.
And through questioning and all that stuff, I was trying to figure out if this is their first time buying, how long have they been renting for, how much do they currently have saved, and like what's going to be kind of the best avenue to go down. Turns out, first time home buyer program was perfect for them. They ended up only needing 3.5%, which was great for them because it was significantly less than 20%. And they ended up only putting down around $8,000, $8,000 and some change, somewhere in there. But they were super relieved once they learned that that's what they needed versus how much they were expecting to put down. So I'm sure that's kind of been the same thing for you, but anything different there?
Yeah, so usually when people will reach out to me and ask me this question, I tell them, if you could have around $10,000 saved, that would be ideal.
For sure.
It doesn't mean that you have to have that much saved,
Right.
But typically, if you have that much saved, you know that you can save money. You know that you're in a spot in life where financially you're not living paycheck to paycheck. So it tends to be a safer route to go if you can, save up that much money. And also if you don't use it, you can use it for furniture purchasing or renovations at the house. There's always stuff that you want to do typically when you first move in. But it's not required. I've
Right.
had clients come to me before where they have had nothing saved, maybe like a couple of thousand. But a lot of times when you're looking into the home buying process, people don't necessarily take into consideration like their full financial situation, because obviously it's going to depend how much money you need,
Right.
what price range you're looking in. And when we're talking about these first-time home buyer programs and our clients in these situations, we're talking about usually under $250,000 homes
For sure.
in our market.
For sure.
So, but I have had clients that have had, their initial earnest money deposit, which is usually 1% of the sales price. They've had that gifted by a family member.
Okay.
So we're saying $250,000, that's $2,500 up
For
front
sure.
that they have gifted. And then we use a down payment assistance program and seller paid closing costs to get them into the house where they're not bringing any additional money to closing.
Right.
So that is a thing. And also with new construction,
Yes.
I've had a situation where they provide a lot of seller paid closing costs. Is that what you're seeing right now in the market?
Yeah, I am, and that's actually what my clients are using right now.
Okay.
So we had to do some negotiations because they did have to have all of the closing costs covered.
Okay.
The builder was offering, some, but not all, and we kind of had to adjust it a little bit within the sales price and the closing costs to where we could make up the difference and help my clients stay within their monthly budget. And that was actually super helpful because the builder was already offering over 60% of what we needed. So it wasn't like we were asking for $10,000 for fun,
Yeah.
We were able to meet in the middle and come to an agreement and then actually just help them get the house, and obviously that helps the builder too. So everyone, we were able to create a situation where everybody got what they needed. So it was definitely cool and something that I wasn't super in touch with, I guess you could say. I didn't know how you could actually adjust those numbers, but through looking at it and trying to come in the middle of the sales price and then the actual closing costs, it was actually a lot easier than what I was expecting, for sure.
Yeah,
for sure.
so what you're saying is initially with the new construction home, it was priced at one point and the builder was offering a set amount of
Right.
concessions back to the buyer, and so
Right.
y'all adjusted the sales price up
Right.
to account for the additional money that they needed.
Yes.
Yeah, so that's a really common, even with resale homes. I know a lot of times in negotiations with my clients, we've done the same thing.
Right.
Because when you need an extra $5,000, well, we'll just say an extra $5,000
Right.
for your closing costs, it's a lot cheaper to finance that into the price.
Yes.
Versus trying to figure out how to come up with it, or
For
taking
sure.
the time to come up with that additional money.
For sure.
Which I know a lot of people, initially when we're talking about loans and finances, they're like, obviously I want the cheapest possible property. But then in reality, when you start looking at the numbers, every $5,000 to $10,000 may be $50 extra
Right.
on your payment. So it ends up being a lot more beneficial to do it that way.
Yeah, for sure. I agree.
So whenever we're talking about all these different numbers, I think it would probably be helpful to break down what exactly people have to pay for, right? So I'm thinking, we talked about down payment. We talked
Yes.
about first-time home buyer programs. I guess we can
Right.
start there first.
Okay.
So first-time home buyer programs, what programs are you typically seeing your clients use in our market?
Honestly, just FHA programs.
Just
loan
FHA
program.
loan
Yeah, that's
programs?
what I've been using and have experience with. I have not been able to use any VA or anything like that as far as those programs go quite yet. But yeah, for me, it's just FHA for now.
Okay, so in my experience, FHA is obviously the most widely used
Right.
first-time home buyer program.
For sure.
Also, there is a state of Texas program called, I think it's Texas Home Buyer Program.
Yes.
If
yeah,
anybody has questions about down payment assistance, you need to talk to a lender because not everybody will qualify for all of them. A lot of times they're based on your income levels, and also it can sometimes depend on the property's location as well.
Yes.
But there are down payment assistance programs out there that basically bolt on to your original mortgage, and they're like a second lien on the home. Some of them are forgivable after so many years of you living in the home. Some of them you have to pay back. But those are a lot of the programs that my clients will use, and usually what I'll see is they'll use these down payment assistance programs to cover the down payment, and then we ask for seller paid closing costs to cover
Right.
their closing costs and any potential additional origination fees for that type of loan. But beyond that, I mean, VA, like you mentioned, you have to be a veteran in order to take advantage of
For sure.
that. There are a lot of different loan programs that different lenders will offer, but I would say the majority of especially for heroes or veterans veteran, a VA loan is typically going to be your best bet. But
For sure.
I've had other people who are family members to veterans use
Okay.
other types of loan programs through Navy Federal or USAA.
Gotcha.
But what I found is that those big, I guess you'd call them big box banks or credit unions aren't always ideal for working in our market. Have you ever experienced anything like that?
I have not. I had a client who was going to go through a bigger bank, but he ended up actually going with the lender because it made more sense for him. He liked the numbers a little bit better. They're a little bit more flexible on their risk evaluation, and he ended up liking the numbers better. So that's the route he was going. He ended up kind of putting things on hold for a little bit, but that's what I found.
So you found that your client mainly just made their decision up front based on the numbers they received.
Yeah, he definitely was open to kind of shopping around to see which program was going to be best for him, and it turns out that's what was best for him.
Yeah, so I wish everybody could make that decision up front.
Yes, yeah.
A lot of times people will have these relationships with their banks or their credit unions, and that's great to have a relationship in that way, to have a working relationship, but at the same time, it's usually not ideal because they have, for example, I had this client that recently used a larger credit union, and it wasn't that the numbers didn't make sense or that the origination fees were too high or whatever in comparison to other people. It was just that we kept getting bounced around between different people. For example, when you get a loan, you have your loan originator, typically
Right.
your loan officer that's going to run the initial numbers. They have a team of people that checks over everything, gets all of your documents, and then they usually send your information to an underwriter who actually underwrites the loan, approves the loan, and gets you your clear to close,
Yes.
who can fund the deal. So the problem was we had this 45-day closing, and they waited until like 2 weeks before closing to actually like get the final docs from my clients. And these people are like, one of the loan processors was in Florida, the actual loan officer was in Corpus Christi, and it seemed like they were working different hours than us. I mean, obviously Corpus Christi is in the same time zone. I don't know about Florida, but yeah, it was a huge mess. And
oh my gosh.
I didn't necessarily want to not recommend this bank to my clients because I had never worked with them before.
Right.
But that's what I'm finding is that if you're working with a bigger bank and not a mortgage lender, that they don't necessarily have the resources that someone would need in order to get taken care of. Not the financial part, like you had mentioned, but like the logistics part of things.
Right.
Where they're waiting until, like we didn't get clear to close until the day before closing.
Wow.
And it was extremely stressful because the sellers of that home were like purchasing another one and closing on that one the same day. And so
Right.
if we didn't fund that day, like it was going to cause a lot of issues.
Wow.
So that's why it's very important to have a lender that people can trust, which of course we do have, you know, a
Yes.
list of ones that we recommend to our clients. But it's always kind of awkward to be put in that situation where
Right.
it's not necessarily the finances that could be an issue. It's like how the infrastructure of the organization works.
Yes, yeah, I have a guy that's under contract on another new construction home, and he knows the bank president, so they're buddies. So he was able to help him out and all that, and the numbers were great for him. So we'll see. You know, obviously we're still a long ways out for that, but hopefully all goes well. But yeah, this is going to be the first time I have a client actually use a bigger bank to purchase a home. So we will see how that goes.
Yeah, I will say the one that does have a little bit of a reputation in our office is probably Rocket Mortgage. They're pretty notorious for approving people initially and
Yes.
then like, you know, the week of closing being like, hey, actually, never mind, you're not
Yeah,
actually
I
approved.
know. It's crazy.
Which is extremely stressful, not only for us, but also for our clients who think that they can purchase a home. And a lot of times what happens is that that first loan officer they talk to takes their information maybe over the phone. They get them pre-qualified.
Right.
And then once they actually get all the final docs, it's like, oh, well, you didn't tell me that you had overtime or that you were an hourly employee. And, oh, there's all this extra information that you never told me.
Right.
When in reality, they should have been getting all that information up front.
For sure.
And I know that a lot of our clients, especially first-time home buyers, are not the most interested in giving all their information like that up front because it feels like a lot, especially when maybe you're still 6 months out. But
Right.
that's the reason that it's so important, is to make sure you are actually qualified.
Yes, yeah. And I think a lot of the times too, if you do end up getting the clear to close with Rocket, I think your payments change pretty drastically. Like you may agree on one thing, but then whenever it actually all comes out, the final docs, it could be something completely different, which is just not consistent, you know, and that's not what you want to be doing when you're trying to make a huge purchase, you know, especially if it's your first time.
Yes, I'm sure there are people out there, like caveat to that.
Yes.
I'm sure there are people out there that have had a fine, you know, experience with Rocket Mortgage, but I think just for most first-time home buyers, especially if you've never purchased a home before, this is your first time doing it, there are a lot of details that it takes to actually close this loan.
Right.
If you're an investor and you've purchased 5 homes, it may be a little different because you know you can get qualified, but
Right.
but for first-time home buyers specifically, so
For
so
sure.
yeah, that's been my experience. But do you ever get any other, you know, like when we're talking to people initially, what do you feel like their first like questions are when they're hesitant about moving forward in the process? Like, do you always feel like it's the money portion, or is it like the timeline, or?
I think for me and my experience, it's definitely always been about how much like money do I need to buy a house? Because obviously they know that they don't need it all in cash. Like they know they have to finance it, but they just don't know like exactly what the cash portion will be for the down payment. Obviously, you can kind of help them get a rough estimate, but obviously clarify it's very rough, and I'm not a mortgage professional.
Right.
And definitely recommend reaching out to someone. Obviously, we have our partners that we have built relationships with, and we can get you connected with. But yeah, it's for me, typically, whenever it's that very first, like, hey, like maybe considering buying a home, how much cash do I need? That's been my experience, but is that the same for you?
Pretty much. The only other thing that people tend to harp on is the monthly payment because they love to compare how much they're paying in rent to how much a mortgage would be.
Right.
But the problem is, especially here in Bryan-College Station, the rent has not caught up to where mortgage prices are. So like pre-COVID, you could buy a home and it would, a 3-bedroom, 2-bath home, and you could get a mortgage that was so similar to the rent. That was always the argument. Like, why are you renting when you can buy for the same monthly payment and, get some equity in the home, et cetera, et cetera.
Right.
But now you're usually looking at a few $100s more a month when you're looking at renting here versus buying. And so I think it makes that decision a lot harder for people because they don't see like the long-term effects of it.
Right.
Have you ever had those types of clients where they're just kind of unrealistic about price ranges and monthly payments?
I have. I think everyone kind of gets it every now and then. Really trying to understand like where they're coming from and why this monthly payment is so important, other than not paying too much money. Like obviously yes, but seeing if there's anything else in there, like do you only how much do you make per month where you need to portion this off, but something kind of like that. But I mean, honestly, it typically boils down to how much I'm paying in rent versus how much I'm paying for the house. And like you said, they haven't really caught up too much. Obviously, I wasn't in the business before COVID, but it's definitely, there's some good difference between the two. But I'm curious, like, has that been your same experience or was it different?
Yeah, that's been the same. I mean, I bought my first house like right when COVID was starting. And to put this into perspective, I was renting a loft in downtown Bryan. It was like it was a 1-bedroom, but it was basically like all open concept. But it was recently renovated. It was super nice. And I think we were paying like $900-ish a month, like $950.
Okay.
And so I was looking around. I really love the downtown area. And this one house came up for sale. And it was really rare at that point, like late, when was COVID? Like late 2020, early 2021? I can't remember. Whenever
somewhere
it
in
fell.
There. Yeah.
Wherever it fell, at the time there wasn't a lot of homes in downtown Bryan that were coming up for sale. So that didn't need a lot of work.
Right.
So this one came up for sale. It was under $150,000. I was a first-time home buyer at that time, and I ran the numbers on my I went on, I think, Nerd Wallet or something and did my own mortgage calculation. Yeah, very official. I thought I knew what I was doing. This was before I got my license. And I calculated the numbers, and I'm like, okay, so we're paying like $950 a month in rent. At this, purchase price with taxes and insurance, it's like $950 a month.
There you go.
So I was like, this is a no-brainer. Why wouldn't I, right? I have this money to spend on the down payment.
Yeah.
So, of course, I moved forward and putting in an offer. And luckily for me, everybody else got really scared. There was the lockdown was put in place right after I saw the house the first time. And so nobody else was interested in it.
Gotcha.
And so I was able to make it work and ended up subleasing out my loft apartment. But I mean, to put that in perspective, to get a mortgage payment under $1,000 a month, when you're putting the least amount of money down, that's almost unattainable in these times, just because the loan amounts are so high.
For sure.
And usually if you're looking at a loan amount under 200, you may be looking at HOA costs and stuff like that.
Yes.
So now when we're looking at homes and talking to our clients, I find that they're saying, I pay $1,500 for a 3-bedroom, 2-bath home and wherever, Bryan or College Station. And I tell them, well, are you open to paying more? Is it doable for you to pay more to have your own space, to not have to deal with property management landlord, to not have to deal with the rent going up, to start gaining equity in the home, all these things. And just with the, cost of overall everything and right now, a lot of times the answer is no. I cannot afford anymore.
Right.
So a lot of times they don't have the choice anymore, but sometimes I think also there's a lot of other things affecting their financials that weren't necessarily a thing. Cars are more expensive now, payments are more expensive.
Yeah, it's cost of living for sure.
Yes. But I find that a lot of people struggle with cars for sure, because the payments, they'll finance anybody a car with $1,000 note.
Yeah.
Then you go and try to get a mortgage loan and you're like, well, I have these 2 cars with, I'm paying $1,500 a month for these 2 cars. Why can't I get a mortgage?
Yeah.
And it's because the debt to income ratio is all messed up now that you
Right.
have these vehicles with high payments.
Right. Yeah, I have some clients that are kind of on the fence right now. They're trying to get some of their debts paid off so they can actually qualify stronger. I think the guy has 2 4-wheelers and a boat or something like that. and he's in the process of trying to get all that taken care of. That way he can actually qualify a bit stronger. So yeah, that's definitely something that's pretty common.
Something I run into a lot when I'm on the phone with people too is they'll tell me, I'm not ready to buy a home right now. I want to pay off all of my debt first.
Right.
Have you ever heard someone tell you that?
I have, yes.
So what does that conversation usually look like?
So first, obviously, in my brain, I'm like, okay, that can mean a whole bunch of different things.
Yeah.
And it also couldn't really affect you as much as you may think, you know? I think it's always smart. I typically recommend just talking to a lender. Obviously not that straightforward, but we kind of talk about it a little bit more and end up, that's like kind of where I go. I recommend they just reach out just to see. There's nothing wrong with looking at it just to see if it's actually affecting you as much as you think, or if it's not really anything worth your, obviously not worth your time, but more just like it's okay if you were to move forwards now because you're still fine. Like you're not necessarily hurting yourself. But typically, if they're already in that mindset and they go talk to a lender, they can either, you know, confirm what they're already thinking, or they can learn something, hopefully. So that's typically what I do. But I mean, is that the same for you, or?
To some degree, I find that a lot of people who are dead set on like, I want to pay off my debt first, they have a reason for that usually.
Right.
And I find it really hard to not argue with them, but to make an argument for like, no, you don't have to pay off all your debt, even though that's usually the case. I mean, most of my buyers have student loan debt, medical debt, car payments, credit card payments. Like most people are in a lot of debt and they're still out there buying homes. So I don't know. It's totally a mindset thing. I think talking to someone and getting more into the details of what they're talking about, like if they say, well, I only owe $5,000 left on my car and I really would like to pay that off because my payment is $300 a month and I just want to be able to save that or something. That's a little bit of a different conversation versus someone being like, well, I have, $50,000 in student loans. I feel like I need to pay those off before I purchase a home. Where in reality, and not saying that this is the right move for anybody, you have to speak with a mortgage professional.
Yeah, figure that out first.
But hot take, like, you don't have to pay off all your debt in order to buy a home. You can move forward with buying with all these types of debt out there and still get into a financial situation that you can be comfortable with, depending on your situation.
Yes.
So that's how I feel about it. But I think also when you take into consideration, like, okay, how much are you paying monthly on these things? How long is it going to take you to pay off these things? If it's going to take over 3 years, like how much are prices of homes going to go up in that time?
Right, yeah.
And how much equity could you have gained by buying now versus later? But obviously it's up to everybody's own comfort level, because I had some clients that they were super qualified. They were putting 20% down and they were still very hesitant about buying because they were like, this is just a big difference between our rent. And even though they were getting a really nice home in a nice neighborhood, it can still feel very scary and it can be very emotional to put all this money into one thing and move forward with it. But have you ever had any clients kind of have that mindset when going into it?
I had a guy once, a couple months back. It was his first time buying a home, and he was doing it all by himself, just getting out there and buying a home. And it was somewhat of a new construction. I think it was like 2022, so somewhat new.
A couple of years
old. I think someone rented it for like 6 months, but it was never actually like sold. And yeah, he was going from graduated college, started working in insurance, and then fixing up his place now, and I think his parents owned it, or maybe he's paying rent there, and he was just looking to buy his first home. And it was obviously like super emotional time during inspections and everything going on. Ended up backing out of the deal and just kind of taking some time to really understand if that's like, if he wants to do something permanent like that, because I think it kind of set in that like you're purchasing this and like this is where you'll be for a while, and yeah, I mean, he definitely had some experience of that. It was a very big commitment, and he still is looking to do something, just not necessarily right now. So he's just kind of mentally preparing, and I mean, I respect it. I definitely don't want any clients to go into a home that they're not like actually like wanting to be in. I think that's definitely something that's not uncommon in the industry, but I'm glad that he was able to voice his opinions to me and like actually speak up and say, hey, like I'm not feeling too good about this. We were still like well within our option period. I think it was like day 2. So we backed out of the deal. I mean, he was excited that he didn't get himself into something that he wasn't like wanting to pursue. So obviously it was kind of a weird time because he was like, man, I really wanted the house,
Yeah.
but I'm glad I don't have it. And for me, I was like, this was a huge roller coaster. I was like,
Oh, yes.
I was like, I'm glad you didn't get it, but it's like, wait, what? You know? So
Yeah.
it was a weird time, but again, at the end of the day, like I was able to help him do what he needed to do, you know, and that was my goal going into it, and I feel I did my job. So instead of trying to be like, no, we're good, it's fine, just keep going, I was just like trying to understand like where he was coming from, and that's initially what happened. So
I think that is, which we've talked about a lot of times, but it's a big part of our job to understand what people's goals are.
Right.
And not just the surface level, like, oh, like I want a 3-bedroom, 2-bath on an acre, whatever. It's really like getting down to the nitty gritty of what they're looking for and what their goals are, especially during the emotional roller coaster that we experience during the transaction. I cannot tell you how many times, like, I've been taken on that ride over and over, and you go through it with your clients, and you're trying to insulate everything that's going on and the craziness and the emotion of negotiations. And at the end of the day, it's like, if it's the right one for you, you will know. If it's not, then we find that information out and we can move on to the next one. And I know a lot of my clients have told me that our team does things a little bit differently. Like, we are very upfront about, like, we want to find the right house for you. It doesn't matter if we have to go under contract 2, 3, 4, 5 plus times. Like, we want to find the right one for you and make sure that you're happy at the end of the day, regardless of what we have going on.
for sure, and that's something that I didn't really understand when I was getting my license. I was definitely under the impression of like, this is sales, you got to really get after it.
Yeah.
And once I did join the team, I was like, oh, like, no, this is just people interacting with people and understanding their goals and why they have their goals and working with them to achieve those goals. It wasn't necessarily like, hey, like, here's everything about this house, here's why you got to buy it now. It wasn't like a infomercial, if you will, but a lot more of just helping people do what they need to do.
Yeah, there's so many steps in the process that I don't think people take into consideration, because what's glamorized is like seeing, like, you're showing a beautiful home and then you're writing the contract and you're making a ton of money.
Yeah.
And that's what people think, the process looks like, when in reality, the process is so involved, like, especially for first-time home buyers out there, which I
Yes.
know our team works with a lot of. It's like, okay, we're like sitting down together, we're making a plan, we're getting you comfortable, we're allowing you to like open up to us,
Right.
and actually tell us what your goals are, not just the surface level stuff, which is surprisingly difficult for a lot of people, because you think we're just trying to sell you something, and in reality, we're just trying to figure out how we can help you.
For sure.
So, yeah, but I think to answer everyone's question about how much do I actually need for a down payment, it depends. And I know that's not the answer that anyone is looking for, but you really need to speak with a mortgage professional to know for sure, even if you're a year out or 6 months out, that's going to be the best person for you to talk to. And if you guys have any questions, you're welcome to reach out to us or speak with your friends and family about maybe someone they've used in the past. But I would highly recommend working with a mortgage professional who has access to multiple different loan programs and not just maybe, the local bank program. But, talk to a local realtor and see who they recommend. It doesn't hurt to shop around and talk to a few different people and see who you vibe with the most.
Yes.
And I guess for next week's episode, maybe we should probably put another poll up on Instagram and see what everybody is interested in talking about.
Yeah, I like that idea.
So if you guys want to interact with us, feel free to give us a follow on Instagram. Our information will be linked down below. And if you're interested in getting other additional advice about real estate, listen to our previous episodes where we talk about all things real estate.
All things.
All things. So thank you guys so much for tuning in, and we will see you all next week.
Thanks for hanging out with us today. We hope you found something useful or at least had a good time listening.
Yeah, if you enjoy this episode, feel free to subscribe or share it with someone who might enjoy this content.
And if you have any questions or topics you want us to cover, reach out to us on Instagram. Everything will be linked below for you.